Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into a report from PAVD Medical Device Company. It seems they've been busy selling stock and making deals. Will it save them or sink them? Let's find out. This is a Form 8K, which is like a corporate bat signal. Companies use it to announce important events to their investors. This one was filed on February 21st, 2025, and it's about selling company shares. The main event happened a few days before the report on February 18th, 2025. That's when PAVmed made a deal to sell shares of its stock. The company we're looking at is PAVmed Incorporated, based in New York. This part of the report talks about something called unregistered sales of equity securities. In simple terms, it means PAVmed sold shares of its stock without registering them with the Securities and Exchange Commission, or SEC. Usually, when a company sells stock, it has to register it, which means providing all sorts of information to the government. But there are exceptions to this rule, such as when they are selling to specific types of investors. PAVmed is partnering with its subsidiary or smaller part of the company, Veris Health Incorporated, or Veris. PAVmed and Veris agreed to sell shares to some investors in what they call a subscription agreement. It's just a contract where the investors agree to buy shares. The investors they're selling to are considered accredited, which means they have a good amount of money and supposed financial know-how. This is a way companies avoid needing to register with the SEC. PAVmed is planning on selling these shares in an offering. It's important to note that this is all happening outside the regular stock market, which is why it's called an unregistered sale. They sold over 2.5 million shares of PAVmed bin stock, plus something called pre-funded warrants to buy another almost 800,000 shares. Think of warrants like options. It's the right, but not the obligation to buy shares in the future. These pre-funded warrants let investors buy shares at a later date. Veris, the PAVmed smaller part, agreed to give each investor about 0.2 shares of their own stock for every PAVmed share or warrant share they purchased. This equals to about 677,000 shares of Veris stock given out in total. PAVmed completed the stock sale on February 21st, 2025. The company got $2.37 million, or $2,370,000. They're going to use the money to resume development of Veris's implantable physiological monitor, which probably means a device that can be placed inside the body to track health data. They'll also use the money for general expenses. The agreement includes promises from PAVmed and the investors. PAVmed promised to protect the investors if it sells more shares at a lower price later on. If PAVmed or Veris sell shares at a cheaper price later, these investors get more Veris shares to make up for it. It's like a price guarantee. PAVmed has to ask its shareholders to approve the issuance of shares that are part of these pre-funded warrants by June 30th, 2025. This is because the stock market has rules about issuing a lot of shares. The investors also get the right to buy into any future stock offerings from PAVmed or its subsidiaries. And PAVmed agreed not to borrow any more money until August of 2026. With some exceptions, this means they can't take on new debt. PAVmed also signed something called a registration rights agreement. This means they have to file papers with the SEC to allow the investors to resell the shares they bought. The pre-funded warrants expire in February of 2030, 5 years from now. The investors can buy the shares for a very cheap price of $0.001 per share. The investors can pay for the shares with cash, or they can do it cashless, meaning they exchange the warrant itself for shares based on the stock's value at the time. If they do it cashless, the number of shares they get depends on the market value of PAVmed's stock. The warrant's price and the number of shares can change if PAVmed does things like a stock split, stock dividend, or merges with another company. The investors get to participate in any rights offerings, which are special deals offered to existing shareholders. However, if PAVmed issues shares at a lower price, the warrant price won't change. Because of these rules or exemptions, PAVmed didn't have to register the sale with the Securities and Exchange Commission. This report isn't an offer to sell shares. It's just a notification of what already happened. And This part lists exhibits, including an interactive data file. Okay, let's step back and look at what this all means. PAVmed needed cash, so they sold shares to some accredited investors. To make the deal sweeter, they included warrants and shares of their subsidiary, Veris. They also promised these investors some protection against future stock sales at lower prices, as well as some say in future stock offerings. From PAVM's perspective, this raises some strength and weakness questions. On the plus side, they got much needed cash to continue developing their products, especially the Veris implantable monitor. This could be a big opportunity if that product takes off. But there are downsides. Selling shares dilutes the value of existing shares. And the promises they made to these investors, like the participation rights and the no debt clause, could limit their flexibility in the future. Also, there is the very serious threat that stock offerings from PAVmed or Veris would go down further in price. This is something investors would be very mindful of. Looking ahead, PAVmed faces some risks. They need to get shareholder approval for those warrants. If they don't, that could create problems with the deal. The medical device market is also very competitive, so there's no guarantee their products will succeed. On the other hand, if they can successfully develop and market their devices, especially the Veris monitor, there's significant potential upside. Valuing a company like PAVmed is tricky because a lot of its value depends on future success. It's hard to say exactly what the stock is worth, but based on their current financials and the potential of their products, a reasonable price range might be somewhere between 50 cents and $1 per share. Overall, I'm leaning slightly bearish on PAVmed right now. While the cash infusion is helpful, the terms of the deal and the risks they face make me cautious. Thanks for watching. If you found this helpful, please subscribe for more corporate decoder analysis.